Hello, can I confirm that live stream has started?
As Jem.
Thank you. Thank you for everyone for attending this meeting of the Governance Committee for Wednesday, the 28th of July 2021. For those of you who don't know me, my name's Councillor Deborah Platt and I'm the chair of this committee, and our vice chair is Hasina Khan. Please note that this meeting is being live streamed on YouTube and the recording will be available after. For each item, I will invite members to raise their hands when they wish to speak. If the technology fails, I will adjourn the meeting for a few minutes and we will try to resolve the issues. If that's not possible, a new date and time will be organised. So, item one, apologies first. We've got apologies from Councillor Sarah Ainsworth and independent person Peter Ripley. We've got any others?
Not that I'm aware of, Chair.
No. And we've got our independent member Charlotte in attendance today. So item one, minutes of the meeting. Are there any issues to raise on the accuracy of the minutes? Nobody? Okay, can I have a proposer for that? Thanks, Sina. And a seconder? No? Thank you. So if we could use the voting system. Which you have in front of you. Okay, so that's carried. And those minutes are approved. Item 2, declarations of interest. So members are reminded of their responsibility to declare any pecuniary interest in respect of matters contained in this agenda. And you can declare that any time if it crops up. No items? Okay, thank you. Item 3, so the 1920 Audit Findings Report, which is pages 43 to 74. And we've got our external auditors, Grant Thornton, Michael Green, in attendance. He's going to take this item. He's behind me, so excuse me for having my back to you. So I'll hand over to you, Michael.
Thank you, Chair, and good afternoon, members. Very pleased to be here today to present our audit findings report in respect of the 1920 financial statements. I'll take the report as having been read, but I will go through the key aspects of the report. Happy to take any questions, of course, at the end if you need any further detail. If I could start on page 3 of our report, in the headline section. Our audit for 1920 was undertaken against the background of the COVID-19 pandemic, which meant that we had to perform the audit in a different manner than as we have done previously, in that it's been performed on a remote basis, with officers of the council obviously working from home themselves. That's presented some challenges in being able to obtain and corroborate certain areas of evidence, but thankfully with modern technology as it is, through the use of Teams and screen sharing, we have been able to conduct our procedures as planned and obtain suitable corroborative evidence. In terms of the financial statements themselves, we started the audit later than would usually be the case because of delays to the council's production of financial statements as a result of some issues around valuation of land and buildings. So we actually started the work in February of this year. Had to pause it for a period due to NHS audit season, but we're currently in the completion stages, and we expect to issue an audit opinion within the next few days. That audit opinion we anticipate will be an unqualified audit opinion on the financial statements, which will actually include what we call an emphasis of matter paragraph, which is something that isn't generally included within the audit opinion, but draws out aspects of the financial statements that we feel should be brought to the attention of readers in order to understand some of the issues and circumstances within them. That emphasis of matter paragraph refers to the impact of the COVID-19 pandemic, particularly on the valuation of land and buildings, and also the property assets that are held by Lancashire County Pension Fund. And it's very much around, because of market uncertainty at the time, we are going back to March last year, there were uncertainties inherent within the valuation of those assets, which have been reflected in the report of respected valuers and are disclosed within your financial statement. So we just draw attention to that uncertainty. As noted there are a few areas we're currently concluding. Nothing that we expect would change our opinion on the financial statements, largely around our own administration of the file and bringing our evidence together to issue that opinion that I've mentioned in the coming days. The other area of work that we perform alongside the financial statements audit is around your value for money arrangements. For this year, for 1920, we identified two significant risk areas around financial sustainability and around the purchase of Logistics House, which is a significant transaction for the council. We have concluded our work on financial sustainability, and there will be no findings or issues to report in that area. We are currently finalising our work around the Logistics House purchase and hope to bring that to a close in the coming weeks. But in order to finalise the financial statements opinion, our audit certificate won't be given at the same time as the opinion on the financial statements, and we expect to formally close and certify the audit on completion of our value for money work. In terms of statutory duties, as it stands at the moment, we haven't exercised any of the statutory powers available to us, but as I say, we're still concluding our work on value for money. Over on page 5, just pick out some key areas here. Our audit was performed to a materiality level of just over £1 million, and any errors or misstatements that we identified as part of the audit, over 51,000, are reported back to this committee as those charged with governance, and any errors within the remuneration report or remuneration disclosures over 20,000, being quite a sensitive area of the financial statements, would be reported back to this committee also, though there are no errors in that area. Moving on to the significant audit risks that we identified for the year. Over on page 6, COVID-19 obviously was identified within our audit plan as having a significant impact. The slide there sets out the various procedures we performed in response to that area. I'm pleased to report there are no sort of issues or concerns arising out of that, only reference to that valuation uncertainty and the reporting impact within our audit opinion. The other significant risk areas around management override of controls, which is a standard risk that features in all our audits. That focuses around management's use of journals or other adjustments to the financial statements and potential manipulation of a financial position. We performed numerous procedures as set out on page 7 in response to that risk, and again have no matters or issues to report to the committee. Further risk is around improper revenue recognition, and given the nature of the council's income streams, we have rebutted the presumed risk of fraud in recognition of income in that area, and largely that's because of the way the council is funded through grant income, rates and non-domestic rates and council tax, and that they're sufficiently easy to verify and difficult to manipulate in a fraudulent manner. We have performed procedures to test material items of income and expenditure, and again, no issues or matters to bring to your attention. Moving over the page onto page 8, we've already mentioned that there was a delay to the financial statements as a result of issues around valuation of your land and buildings. As a result of that, we obviously focused on that area and performed the procedures as set out on the page there. There are some, a material adjustment that we've identified as part of our work, which has actually reduced the value of properties by just over 10 million. That's in relation to Strawberry Fields, Primrose, and the Market Walk extension. And the issue related to those was that your valuer had included their value at cost, i.e. that the cost of building those assets and bringing them into use. Per the SIPFA code guidance, such assets should be valued when they're brought into use to an existing use value. So we challenged that approach, and the council subsequently engaged its valuers, the new valuer to the council, who delivered that revised valuation that's resulted in the adjustment as noted on that page and set out in our schedule of misstatements. Over on page 9, we identified a significant risk around the valuation of your net pension liability. That's a significantly material number within your financial statements on the balance sheet, and it's underpinned by numerous estimates, judgments and assumptions, and therefore the risk of error is deemed to be greater than other areas of the financial statements, and that error could potentially be material. We've performed, again, a number of procedures to address that risk, including gaining assurances from the auditor of Lancashire County Pension Fund. I'm pleased to report that we identified no issues or misstatements as part of that, other than reflecting the material uncertainty over property asset valuations. Moving over to page 10, Logistics House has again been quite a focus area of our audit. A property that was purchased by the council for 34 million during 1920. And given the material nature of that asset, it warranted detailed attention. The valuation of that property after it was purchased originally showed a material reduction in value from the purchase price, and management quite rightly challenged that reduction in value, which is indicative of what we expect management to do, to challenge the work of their own estimates. And subsequently, following various advice from council advisors, that property revaluation was moved upwards again in line with the purchase price, and that was connected with the yield assumption that the valuer had originally used as part of their valuation. Given the challenge that management performed on that asset, we actually engaged our own valuation expert to reconsider the valuation, to provide us with the assurance that the valuation reflected in the draft financial statements was appropriate. Pleased to say that our expert concurred with the valuation that was ultimately presented. Linked with the Logistics House valuation, we also looked at the accounting treatment that was applied to it on bringing it into your financial statements. It was originally classed as an operational asset within your property, plant and equipment number on the balance sheet. We did challenge that treatment on the basis that the assets had been purchased to secure a future income stream for the council, and as such was indicative of it being more appropriately classed as an investment property. Management have agreed with that view, and it has been reclassified in the amended financial statements. And linked to that, the income that was due in terms of the rent payable on the assets, because the asset was retained in the ownership of the council and it hadn't been transferred to a subsidiary company at the year end in 1920, we have agreed with management that a sum of just over 949,000 should be recognised within the comprehensive income and expenditure statement of the council with a corresponding adjustment to the balance sheet. I understand, and Louise will touch on this in her presentation, that adjustment hasn't as yet been processed through the financial statements that you have been provided with, but will be an adjustment that management do propose to make. In terms of the significant findings of the risks we identified, that brings that to a close. The other key areas I wanted to just point out for information were that obviously the value for money conclusion that's set out on page 17 is still ongoing. On page 18, we reconfirm that we remain independent as your external auditor, and that finally the audit fees for 1920 have yet to be finalised given the additional work that is still ongoing. We will discuss those with management and they will likely come back to this committee for approval and formal approval by public sector audit appointments. And lastly, the adjustments that we've identified as part of the audit are set out on page 20. I don't propose to go over those in any detail, but again, happy to take any questions.
Thank you, Michael. Does any members have any questions for Michael about this report? No. Well done. So, if there's no questions, can we note that report, everyone? Thank you. So, moving on to item 4, the 1920 Statutory Accounts. We've got Tony Ferber here to help us with this one. Over to you, Tony.
Okay, Chair, if I just...
Yeah, higher voice than
yeah.
Tony, but sorry, Louise then.
and then once it gets to the technical questions, I will refer to Tony. Thank you. So pleased to present the statement of accounts for the financial year 2019-20, and immediately preceding this meeting we had the training session which went through the accounts in some detail. So I think just to summarise, the accounts are presented to the committee for approval. As Michael has referred to in his earlier report, we did experience some delays. Normally, we would have expected to be being able to publish audited accounts by the 30th of November 2020. But due to the delays with evaluations, that did cause some slippage, and then obviously for them to be then audited, knowing that we had to go back in the queue and wait for our turn to be audited as time had moved on, to ensure that the auditors are correctly resourced, etc. The work has been done over the past few months and has just been completed on these accounts. Obviously, as Michael said, there is still the VFM conclusion to conclude, which we expect over the next couple of weeks. But essentially, the financial statements are complete and are ready for approval. As Michael said, hopefully there should be an unqualified opinion on them. I'd just like to say, record really that the thanks to the team, really difficult, the finance team, really difficult working under COVID restrictions in producing these accounts and also the 2021 accounts. So we've managed to work really well with the auditors using maximising technology to be able to produce them. And I think obviously there is the legal requirement to produce the accounts, and in presenting them today for approval, it's our ability to demonstrate our accountability to the public, to residents, to businesses and to government in the funding of the services, and just really to provide validation, I suppose, across the figures that are included in there and the narrative that is included in the report around the income and expenditure transactions that have taken place during the year, and also at a snapshot point in time, which is the 31st of March 2020, what the assets and liabilities of the council were at that particular moment, subject of course to the discussions on valuations that we've just had. In relation to the accounts that are presented today, as Michael just referred to, there is one adjustment that we know will need to be processed, which is in addition to these, and that relates to the recognition of rental income for the period through to the 31st of March 2020 in respect of Logistics House. So that will increase the income in the income and expenditure account, and it will increase the creditors, so the amount of money that we owe in respect of that transaction, and that equates to 949. So the request is that, having considered and approved the accounts, subject to that adjustment being processed. But happy to take any questions.
Okay, if members have any questions of Louise or Tony, please speak now. No? Okay, so if there's no questions, can we have a proposal and the recommendations? I'll read them out because they're quite long. So one is that the committee should approve the audited statement of account for 1920, Appendix A, subject to any amendment which, in the opinion of the Director of Finance, the Section 151 officer, are minor in nature, such minor amendments to be defined as non-material to the financial position of the authority. The Director of Finance will exercise this delegation in consultation with the Chair of Governance Committee. In the event that the Director of Finance is of the opinion the amendments are material to the financial position of the authority, Governance Committee will be reconvened to approve the new statement of accounts. And the second item is that the committee should authorise the Chief Executive and the Chair of Governance Committee to sign the letter of representation, which is Appendix B. So if I can have a proposer for that one. Thanks. And a seconder, yeah. Okay, and if you want to take a vote on your system on that one. One of us missing there. Did I press my button? Just push the colour you want more harder. Yeah, you're done. You're done. Lovely. And that's carried. Thank you very much, everybody. So moving on to machine gone off now. Item 5, charity and trust account. So back to you, Louise, on page 227 to 234.
Thank you. So included within the pack today is the report, the accounts of the charity and trusts that the council is responsible for. There are 5 in total, and each of them, with the exception of one, carries very small balances, have minimal assets between, I think the lowest has 1,700 and the highest 5,000 almost 400. One exception to that is the proceeds of sale of the former Free Library, which is holding assets of 130,000. So there's very, very little transactions that have gone on during the year, just the investment income that's been earned on those. I would say that over the course of the year, we will look at those with particularly those with the minimal balances, to see whether there is opportunity to be able to wind those up to apply them for the purposes that they were intended, given that there's no current use being made of them. Obviously, the process of the sale from the library is a larger balance and would need more consideration. But at this stage, it's just we're just asking committee to approve the accounts that are presented in appendices A to E.
Thank you, Louise. Do any members have any questions on that report? No, we've got a recommendation here that the accounts presented in Appendix A to E be approved. If we can have a proposer and a seconder. Yep. Thanks. And if you want to use your voting system. And that's approved. Thank you very much. Fine. So moving on to item 6, we've got the management responses to the external auditors' planning inquiries, and that's pages 7 to 24. And Louise again.
Thank you, Chair. So further on the agenda is the Grant Thornton Audit Plan of the 2021 accounts. And in the process of preparing that plan, the council was asked a series of questions to inform that planning process. So the paper today is asking committee to review and approve those responses that we have provided to the auditors in response to their inquiries. There's 2 areas that are covered in the paper. So Appendix A, there was a suite of questions that were asked, such as, are there any events or issues that will have significant impact on the accounts for 2021 that we need to make the auditors aware of? So obviously COVID is a massive impact, not just on the financial elements, but also on the operations and the governance of the council throughout the financial year. But also questions around the accounting policies and the appropriateness of those that have been included, any significant transactions that the council may have undertaken during the year, or any circumstances that would lead to the impairment of assets. Also questions around fraud. Are we aware of any fraud? And if there's been any impact of laws, changes in legislation, etc., and how we have approached that. So we have provided in there not only the questions that were asked, but our responses to those. And at Appendix B, clearly the financial accounts contain a lot more other than the hard cash transactions that have gone through the year, and the financial transactions that we are certain about, so debts that we owe and debts that are owed to us. There's a lot of assumption and valuation incorporated in the figures, primarily around the value of plant, property and equipment, and also around pensions, evaluation of assets and liabilities. So again, the questions to inform the audit plan were asked of management about how we went about ascertaining those valuations, and all of that is covered in Appendix B, so about the use of professional valuers who are appropriately qualified to give values on properties, but equally the actuaries who would give us information on the pension fund and the liabilities. So that could be in relation to the pension and the assets. It would be about the projected returns on the investment going forward, because all of the pension fund is invested in gilts, bonds, stocks, property, etc. and so estimations of what that would be worth. But similarly, the liabilities contain estimates of the future call on those pension assets, and that's based on the number of people in the scheme, the age of people in the scheme, the expected longevity of those people, and estimated pay awards, etc. going forward. So a whole host of assumptions that we rely on the actuaries to provide to us. So again, that is included in Appendix B, along with other smaller figures, but nonetheless important, and that's ones that we would take as officers in relation to provisions for bad debts. And I must say on that, just because we've included a bad debt in a provision, that doesn't mean to say it will turn bad and we won't chase it. We will continue to chase it, but we err on the side of caution and prudence to make that provision. And also things like business rates, so any appeals that may come through against the rateable value of the property and what that might do to our income flow. So again, all of that articulated in Appendix B to the report, and that's been provided to the auditor and hopefully was of assistance in producing the audit plan. Happy to take any questions.
Thank you, Louise. Do any members have any questions for Louise on that report? No, okay. So the recommendation is the Governance Committee is asked to review and approve the management responses to the auditors' inquiries as attached. Can I have a proposer for that report? Okay. Thanks. And I second it. And if you want to vote using your system. Lovely, that's carried. Jumping to item 7 on the agenda, which is the 2021 Audit Plan, pages 235 to 258. The external auditors, Grant Thornton, George is here to present that one. Sorry again for having my back to you, so I'll hand over to you.
Thank you very much, Chair. So my name's Georgia Jones. So you've just heard Michael go through the 2019-20 audit and the results of that, and I'm taking over as engagement lead for the 2021 audit going forward. So I'm pleased to present our plan for that audit, which sets out the risks that we've identified and the work that we intend to do in order to mitigate those risks. So if we start on page 4 of our plan, which is page 238 of the agenda, that does give the headlines, as it says. So I guess one of the changes for this year is the potential that the council will have to prepare group accounts. So the council has a property company, as you'll be aware. So there does need to be an assessment of the transactions through that company and the effect that they would have on the council accounts if consolidated into those accounts. And if they are material, the transactions, then that would necessitate the preparation of group accounts. So we're just highlighting that and potentially the work we will have to do around that, and that's set out a bit later in the plan. Also, we've identified significant risks which are set out there. So again, quite similar to the 1920 ones, management override controls, valuation of land and buildings, including investment properties, and the valuation of the net pension fund liability, and they are set out in more detail further on in the plan. We let you know about our materiality levels, so quite similar to last year, so you can see the figures that we are working to in terms of the testing that we do on the accounts and the reporting to yourselves as members, and also the value for money arrangements, which I'll go into more detail in a little later in the plan. And there's also some logistics there as well in terms of the timing of the audit. So just on the following page, there is that group audit scope and risk assessment. So the key risk we've identified if there are group accounts and that property company is consolidated is around management override controls. And that is a mandatory risk under the auditing standards. So you would always get that as a risk for any audit that was carried out under auditing standards. And we will do specific procedures, especially around the rental income that goes through that property company. And then just the next couple of pages set out those significant risks identified. I won't kind of go into them in too much detail because Michael has already kind of explained those risks and what they pertain to in his presentation. But you can see similar risks in terms of revenue recognition, which we have rebutted, and we set out why. Management override controls, which, as I say, is a mandatory risk and what we will do. And then the following 2 pages around the pension fund net liability and the valuation of land and buildings. Then the next couple of pages after that are around accounting estimates. So for 2021, there is a new auditing standard which focuses on accounting estimates, and that has increased the focus on that area and the work that we need to do as auditors to gain assurance over those estimates. And that just gives you some background and information around that, and also the key estimates that we have identified at this point for the council and the work we will be doing to verify them, and to just ensure they are reasonably based and based on evidence and kind of assessment by management. And then just on page 246 of the agenda, page 12 of our report, we set out other matters. So that's the other areas of our work, which is included within the audit scope. So in terms of the narrative report, your governance statement, the work we do there, and the various other work such as the whole of government accounts for the National Audit Office. We also audit, as you would expect, any material balances and transactions within the accounts. And we also look at going concerns. So that's really that the accounts have been prepared on an appropriate basis, and whether there is any kind of uncertainties around that, that might need to be disclosed in the accounts. Following page sets out materiality, again, for your information and how we calculate that, and the reporting levels that we'll come back to in our audit findings report at the end of the audit. And just on value for money, so if I take you to page 249, page 15 of the report, so just wanted to bring to your attention, we've got in there that we haven't identified any risks of kind of significant weaknesses at this point in our planning and in our audit. But obviously, as you heard from Michael earlier, that work isn't actually complete for 1920. So depending on kind of the results of that and any findings coming out of that, then we will reassess our risk assessment around value for money. And if there are any significant weaknesses, we will then bring that back to yourselves to let you know, and to let you know the work that we propose to do around that. So I just wanted to make that clear for members as well. And we just really set out the logistics and the team and our fees. So the detailed analysis of the fees is on page 18 of the audit plan, which is page 252 of the agenda. And that just really sets it out in detail so you can see what's changed and why it's changed and what impact that has had on the fees for the audit. We reconfirm our independence on the following page, and then the appendix is just really kind of some information around the audited standards that we work to. So I'm happy to take any questions about the plan.
Thank you, Georgia. Do any members have any questions about that audit plan for 2021? Oh, a quiet bunch today. Lovely. So we're just noting this report, so there's no decision to be made on that one. So if everybody wants to note that. Thank you. Item 8, Treasury Management Annual Report 2021 and Quarter 1 Monitoring 21-22, which is pages 259 to 294. And is this definitely Tony, or is this Louise and Tony again?
This one is definitely me, Chair.
Go on,
Thank
then.
you. Thank you, Chair. Treasury Management for 2021. 2021, as in so much else, it really has been a year unlike any other. The key points in the report are just in that quick summary in paragraphs 4 to 5. I think that there will be nothing that will come as a surprise, and in fact probably quite the opposite. It would be something of a surprise were I not saying these things. And the immediately obvious key thing is the level that interest rates have been at with base rate at 0.1%, then clearly interest rates have been very, very low. And I know you've been listening to people say rates are very, very low for a number of years now and doubting that they could get lower. Well, they certainly have this time around. The second factor has been that the cash flow patterns have been very unusual and larger than usual, because we have had tens of millions of pounds coming in, most of it going very quickly back out again in business support grants. So usually you could look year on year. If you drew a graph of the council's cash flow through the year, the graph would be the same shape year on year on year on year. Absolutely not this year. Very, very different, and rather bigger numbers as well. So you put those two things together, the unusual cash flows and the low interest rates, and well, we have had more money than we would usually have, but there has been relatively little that we've been able to do with it. Now, there have been three reasons for that. One, again, quite simply, the overall level of interest rates. And second, with these inflows, money coming in, getting it back out to the small businesses, then the need to keep money at relatively short notice has been heightened even more than usual. Now, the council here typically manages its cash balances within such a level that everything is secure as having enough money in hand is concerned. But there tend not to be very large balances beyond that. So yes, more money, but yes, the greater need to keep it short. And then third, even if there was the moment where we were in a position to place some money slightly longer term, the opportunities to do so have very largely dried up because this situation is, of course, by no means unique to this council. Every council in the country pretty much has been experiencing these same unusual cash flow patterns. And so councils that would usually be borrowing money have had plenty of money in hand themselves. So fewer people actually looking to borrow, and when the opportunities do arise, more people than usual chasing them. So against that background, we would actually be doing very well to perform in line with how we usually do. Now, I've referred already to the fact that money is typically kept short here, but we do impose on ourselves a standard earnings target, and with keeping the money very short, it's always very difficult to live up to it. And quite typically, we will fall a little way short. I think last year we managed, was it 0.63% against a target of 0.75. Well, this year, as we covered at the half-year Treasury Management Report, we reduced the target to 0.1%. And we actually managed to get very close to 0.1%. We managed 0.09%. So yes, we had an average daily balance of £13.8 million. And over the year, that produced a grand total of interest earned of £12,740. Every little helps. And really, I have found it strange in past years, to sit here and say 0.63, 0.68. Actually, that's quite a good performance. Well, this year I have to go further and say, in the circumstances we have found ourselves, a return of 0.09% was actually an entirely creditable performance. The situation, of course, continues. If you look at Appendix F, the average daily balance in the first 3 months of the year is lower than the £13 million. It's just short of 11.5, but still a little higher than would usually be the case. But the pressure continues to be on the interest rates, and really it will be a good result if we can actually manage the 0.09% again this year, because the prospect are that the base rates and so everything around them are likely to remain unchanged now for quite some little while to come. Now, as well as all of that, there have been other impacts of the pandemic that are captured within this report. There has clearly been a very significant impact on the capital programme. The total was £9 million for the year. So clearly, if capital expenditure didn't reach the levels that were originally expected for it, then any borrowing associated with them, that's not going to happen either. So of the £9 million, £7 million has been directly financed from capital receipts, from capital grants, revenue contributions, leaving a £2 million increase in the underlying borrowing requirement. But with the cash in hand, we've been able to cover that borrowing requirement from that source. So we have not, during the year, entered into any further external long-term borrowing. The final thing, I think, really is simply to confirm that all of the council's counterparty limits have been adhered to throughout the year, and all the prudential indicators have been met. And with that, Chair, I'm happy to take any questions.
Thank you, Tony. Do members have any members have any questions for Tony or against the report? Yeah, Councillor Platt.
Sorry, I hope this doesn't sound naive, but looking Appendix A, is there any method of refinancing the earlier borrowings?
Well, not a terribly palatable one. Yeah, I'm afraid the PWLB are ahead of us on that. You know, we can redeem, but we'll finish up paying a premium.
Any more questions, members? No, so we're just asked to note that report, so if that's noted by everyone. Thank you. Item 9, Strategic Risk Update 2021 to 2022, pages 25 to 38. We've got Howard online. Howard?
Good afternoon. Thank you, Chair. Yes, I'm happy to present the Strategic Risk Register review. This is our corporate strategic risks, and we undertake regular reviews of this document and understand what risks there are to the council in what we deliver. So this is the latest revision, and we have 19 risks altogether, 12 of which we've rated as high and 7 as medium. And of those 19, there are 3 new risks that have been added, and I'm happy to sort of just take you through those and some of our thinking behind those risks. Just for the benefit of anybody listening in terms of what we're talking about, the inherent risk, when we talk about that, that is the risk if we do nothing. So that's just as a issue presents itself. When we look at the residual risk, this is when we've taken a number of actions that we call mitigation, and that is how we then sort of reassess if that risk is still high, medium or low. And if we still have a medium risk, we will be looking at what we can do to further reduce it. And so our target risk is a 3rd scoring. But within this document, we just provide the inherent and the residual scores. When we move through the document at point 15, we have highlighted a full table, and the red lettering indicates where words have been added in. And if there is a strike through, that is where we're removing words or phrases from the risk register to reflect any particular changes that need to be made. When we look at the risks overall, the number of changes that have been made, we've had an inherent risk on R14 increased, and that's basically relating to the recent elections. So it creates a new risk where there are new members, and it's around developing relationships and you know, sort of everybody coming together in terms of any training or new members to the council. So it just reflects that inherent risk that happens at that period. The residual risk score for R15, which is the risk on shared services, that's increased basically in terms that we have a much larger shared service structure now. So that does increase risk in terms of how that's managed. So it's just reflected within the residual risk score, but there are a good number of mitigation and actions in place to manage that risk. Residual risk for R9, that has been decreased, And that's really down to policy and legislation changes. And this is because we're in a better position to understand what the position is with regards to Brexit and any types of regulatory or legislation changes. That doesn't mean that we know the full picture, but it does reflect that it's not as uncertain as it once was. And so we've been able to reduce the risk on that. We also are maintaining a separate Brexit risk register, which is just currently under review with all the services across the council. And so that again helps us to identify any particular issues that could arise. We have then created 3 additional risks, and a number of these have actually come from existing risks where they've been split out and restructured just to emphasise that there are some elements that have a greater risk to them, and that's partly due to changes with the way that the pandemic has changed the way we work, as well as the impact on our local economies and communities. So R17 are incidents affecting ICT service delivery and business continuity, and that has been restructured out of risk R12, which is around general business continuity. And this is around part of our reliance on IT systems in terms of the way we operate, and that is again reflected in risk R18 around cyber attacks as a particular risk that the council could face, and around what procedures and what tools we have in place to limit that risk against the council. So again, looking at the way that we now work, there is more remote technologies, there are more people working from home, as well as that reliance on digital, that creates that additional risk. So that's been reflected within the risk register. We then have risk R19, which is failure to optimise new options for income generation. And this really comes from a previous risk where it was around different business models, as well as realising income generation. And we've split this risk from models of working just to reflect the large-scale investments that the council makes and the potential risks that come with that, particularly with the way that the economy may be impacted by the pandemic, and what that does to some of those longer term investments when we're looking for tenants or we're looking for people to utilise those investments or spaces. So the broad understanding in terms of where we've come from is looking at the impact of the pandemic, the changes to the way that we now work, and how that has impacted some of those existing risks, as well as us highlighting potential greater risks. But I do want to emphasise that most of these risks are all managed, and we structure that into the risk assessment. So this means that we're aware, and we're looking at what we do and have mitigating actions in place. At the end of the report, you can see slightly more detail with the risk register in Appendix A. That covers the target risks where we'll be looking to undertake further actions to reduce, as well as the key actions that are being undertaken to lead us to that mitigation in our residual risks. Happy to take any questions from the committee if anybody has any.
Thank you, Howard. Over to members. Have you got any questions about the strategic risk update? No? All quiet. So, as members, we're asked to note that report, if that's okay. Yep. So, moving on to item 10, which is the RIPA application update. Dave, do we have an update?
Yes, Chair. There's nothing. There's not a great deal that need be said. There's been no RIPA application during the period in time. Chorley, like many other district councils, have not used their RIPA powers for many years because of a change of legislation back in 2007-8. So nothing to report, Chair.
Thanks, Dave. And if committee will note that report from Dave. Thank you. Item 11 is the work programme, pages 39 to 40. So if anybody's got any questions on that, if not, we'll just ask to note that one. Okay, so we note that one. I haven't had any other urgent business, so I think we'll close the meeting there. Thanks very much, everybody, for attending. Thank you.